learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming into June 11th, 2020, and the stock market is going to react to what, or in this case, to who? It is Jerome Powell. He had the press conference, the FOMC today, the interest rate decision, then the press conference. But at the end of it, there is a lot of questions and not too much answered, but we still got a lot, and now it is in Wall Street's court to react. So I want to go over that. I'm going to give you guys a brief keys. I'll show you the notes we took during the meeting. We watched it live on stream. Shout out to everybody who got to catch it. And then we'll also go over another recap article, and we'll kind of just talk about some of the end conclusions. We'll make this quick, and then I have the plays for you and what we need to look at for the market, because there is still a lot of opportunities, and I'm very, very excited for what this is even going to set up for the next 6 months, and we have a lot more clarity despite the ambiguity, or more or less, of what we saw from Jerome Powell. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life, ask questions, anything. All we ask is that you are positive and respectful. And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post them below. Shout out to Chad, baby, man. Today was really, really high. But let us get right into it. Right off of the bat, where is it? There it is. These were the notes that we took, but I will say this for the market before we get into it. We'll recap the Fed real quick. However, for the next few days, tomorrow, Friday, and then even Monday, Tuesday, and even for the plays we're going to be looking at this week, watch for this Powell digestion. The market needs to see what happens. At the end of the day, even though I think he was broad, he did give some stuff, and there is some things left unanswered, and even some new stuff, but we will see if the market can be more specific and if they throw a tantrum or not, and how the market begins to interpret him over the next few days. And you will see that play out through stocks, indexes, the rotations, the values, growth, all of that. So watch that. But as far as today now, here's a quick CNBC article. You guys could read this, check it out. It's very simple as far as describing what actually happened. And so this is, again, what he announced. This is the broader view of it, the key points. They kept the interest rates the same. They said they're going to keep buying bonds, and they raised it. There was a little bit of an emphasis on mortgage-backed securities, and that is related to now even some of the real estate market and getting the money out there, and then the economy. It was the worst expectation by the Fed ever to see a tumbling economy of 6.5% in 2020, but a bounce back, a large bounce back. 5% is very large for 2021. See, so that's the broader context. But now, as we were watching, I took notes, and I was kind of writing to you guys while we were watching, getting notes on here. So it's a little bit different than the broader view, and I got a little bit different things out of this whole thing. But one thing he maintained was they need to preserve the flow of credit. This was related to the bonds and how they're going to increase that, because again, one thing that came up is that no lenders, again, this Main Street facility, that's important, but this was different than the bonds in that sense. But all in all, a big emphasis of what he's trying to do is make sure money is able to flow. We've been talking about that. So that was something that came up during this speech. And then as he was talking, everything else, as he gave this broader stuff, again, they said they were not going to even cut rates. They don't plan on it. They don't plan on raising rates. They said no rate cuts even as far as 2021. So it was a very, very broad view. It was a long extended timeline. And at that point, markets started dropping. I was typing in the chat because I was letting him know, hey, market's not really liking this. In my opinion, it was a little too broad. But then as the questions came in, again, more broad questions, but now he even said, this is something I thought that was unique, and I'll talk about it. We went over the prepared statement. I'll show you here after this, but there was some unique aspects to this statement that got brought up, and one thing he was talking about was the yield curve control. He said they've tested it, but they don't really have a stance on this full going Japanification. If you're not familiar with that, go look into that on your own time. I won't get into that, but it is kind of important on a broader macro if there is a real big fundamental problem. And again, this may come up if things do get worse down the road, but this is a potential solution, said they're not even thinking about cutting rates, and then he said it's nothing like the Great Depression, but he worded it awfully and the market didn't really like it. But the final piece, this is what I was really looking for, this Main Street facility. It is not started yet. We've been talking about it. They've been asking him, but he said nobody's registered yet. All they've done is talk yet. And again, him saying this statement even proves, and it's saying that they haven't really started yet, but he's saying once it does get up and running, they will be able to do it quick. But he said he assumed that they were going to need to adapt it more and more. And really, there was a very broad, uncertain tone that I got from Powell. And at the end of the day, what I came to the conclusion of was that Powell believed that Congress and the Fed might need to do more, but he doesn't really want to. I think he's kind of believing 0% in everything that they can manage, and they have enough yet, but really he doesn't even know. And they said it will be based upon the virus. He said that, so we'll see how the market takes that. But overall, it was an interesting press conference all around it. Again, what I got out of this was that final statement I just read you, but also how we're going to be playing this in the short and midterm. And then even in the longer sense, I'm looking at this. This sounds like Powell before last August in that last TLT where they did cut rates. Seemed like he didn't want to, and so he had to be broad in the statements beforehand. He was broad, but yet really specific, and he ended up doing something he didn't want to do. So we've kind of seen that. I got that vibe. So it's playing in line with the timeline I've set forth for the end of the year, where I think as these later Fed meetings, they're going to start getting progressively more important now. So pay attention. You guys saw today. We talked about it yesterday. It did indeed move the market. You guys could see the SPY at the end of the day. We're barely from where we started, not much, but right when it came out, it went up and then it came down. And again, watch the digestion. I wouldn't be surprised to see a big day in the next few days after this. So you're seeing how the Fed can move the market. Some of you guys were never aware of this to begin with, so keep that in mind. But now, even from this meeting, I think every single meeting from here on out will get more important as we start to see where he leans and as we get more information, because the one thing you can't take away from all of this is that there's a lot of uncertainty and people do not know what's going on, and that is even the stance reflected by Jerome Powell himself. So that is pretty much it. I hope you guys have fun with it. Hopefully you don't panic too much. There's nothing really too crazy from this. I mean, definitely keep your eyes out for this, and the markets don't necessarily reflect the economy. I'm not a financial advisor either. I hope you know that option trading that sounded a little bit weird, but I hope you guys are ready. I hope you guys are going to see these plays. We did a few different things. I got a cool strategy to show you guys, so let us not delay and let us get into the plays. Right off the bat, I will go over the play that we made. I talked about Spotify. I did it, but the strategy I want you guys to see is what I specifically did, and you could pay attention depending on your account size. So this was a type of play. Again, I wanted to play it. I didn't really have news. I wanted to play it off of the momentum with Spotify. We've talked about this. If you guys have been watching the watch list, we've discussed where Spotify's at, kind of like Beyond Meat. When it gets up at these levels, you know, it's an IPO. It's still reacting off that Joe Rogan news. So it had a few weeks to decay, and that's what I liked about the contracts, because we bought those contracts today a lot cheaper than we did before. So that's what I liked about the play, but there wasn't really any news, and it wasn't like there was an event, although there was the Fed, and maybe we could have piggybacked off that. Again, I did have a bullish thesis coming into it, but at the end of the day, I did this on the small account and I did it on my bigger account. So I want you to notice the difference of how I played it. So the play that we got, it was the Spotify right here, June 19th. So it only has 1 week. This is a next week contract. 230 call. I got 3 of them at 65 cents. So it's like 180, 190. And then I got on the small Robinhood account. Come over here. I got the exact same contract at the exact same price. So I bought them at the same time, and I did it to separate it because I was like, well, I want to play this. I didn't play. I deposited. It's been almost 2 weeks. We've deposited, haven't made a small account play, and I liked it. But again, I understood there wasn't a real basis, and I don't have a lot of money to work with in this account. So what did I choose to do is I ghetto spreaded this play. So we bought this call. I bought it pretty early in the morning from the Tasty Works. Got it 3 minutes within market open. Again, this was the plan. I talked about it on the watch list the day before. We got in the play, and then it shot up in value as Spotify, it started to go pretty good, and Spotify was already up and leading the market. Market wasn't looking too hot, but Spotify was already up like 1.5. So I think I even paid a little bit of a premium on the contract. It shot up in value. So on the small account, I did the ghetto spread. We had the 230. Here was the 240. I saw this one went up. Spotify is very volatile. It's a high stock price. It had larger spread. So on this contract, the bid was really high. I was able to get $110. So I shorted this at 110. agreeing to sell 100 shares at 240, and then we bought the right to 100 shares at 230, but we paid $65. So I got like $50 back in profit, and then now there's $1,000 difference. So I made this play for free. If Spotify does shoot up, we could still profit and make money, but now there's no way I could lose money. And actually, my cash balance is $44.89 higher. Now, that's because this account only had $100 in it. It's only worth $160. Yeah, this account sucks. It's mainly cash, and I guess we're just clapped on the NVIDIA play. Womp, womp, womp. So again, you guys are seeing how these work. Again, this was a lower quality, lower probability earning. So again, we high risk, high reward. We took the high risk, and you guys see how it's paying off, but we're a little safer with this place. And again, you see how one bad trade on the small account, it makes it a lot harder to maneuver the next play, because I had to wait almost 2 weeks. And even then, this was a low quality play. And that's why I was hesitant. I'm paranoid. And I'm like, all right, I need to ghetto spread this one quick. But then, what did I do if I had more money? What's my strategy? I'm going to hold these. So I ghetto spreaded it on that one, but then I held all of these. So I'm still in this position. It went up. It came back down. It's slightly up. Again, Spotify came a little bit lower, but they ended up actually holding up. Again, there's still a little premium, and the whole market fiasco with Powell even coming in tomorrow, IV stayed high. So that was the first play that I made. And then I took profits here on the SCOs. And then I said I wanted to sell the TLTs. I talked about it. The prices, the puts dropped too much. I didn't like it. I was hoping I could sell like a TLT, like way out the money and get like a couple hundred, but I can't. But after that Netflix play, I'll show you after. I really like it. I like this range with some of these. And this one, you could see it's like just outside. It's about to go one standard deviation out the money. So again, there's still a likelihood I could get clapped on this one, but I sold a naked put. Do not do this if you don't know what it is. I pretty much shorted the put. So Twilio went up, and again, I didn't like this play. This was a no news play. There was like call activity, and it started going up, but again, same logic as any of the other plays. I mean, and even just kind of in this market, again, these are the continuations. Remember Twilio, we saw the earnings, we saw how it went up. Here's the continuation. We'll see how it plays out. But I liked 170. It's not too bad. And what I agreed to is by July, and again, they have earnings. So I was hoping that earnings might keep it jacked up, or if I could even take 50% on this, I might close that one out early, or hopefully, I'm hoping Twilio just rips so far past 170, it'll be good. But I shorted this play, collected $3, and by shorting the put, I agreed to sell the put to somebody, meaning I'm agreeing to buy 100 shares of Twilio at 170. So to make this trade, the risk is I'm agreeing to buy 100 shares at 170. So if the stock drops below there, I still have to buy it at 170, but I collected $300 up front. So by July 17th, if Twilio goes up, this contract will lose in value. But by July 17th, if Twilio is higher than 170, this contract will expire worthless. I was just only on this page. I was only bouncing back and forth. Sorry, I love you. But if this contract expires, I will gain $300. Or if the stock ends at 170, because it'll expire worthless. So I did that play again. I liked it. Remember, we did this play before, and you guys could kind of see. Remember, I said I'll give you guys a monitor, a life beat check, I don't know what to call it, on some of these premium plays. Remember, we did the naked put sell on Netflix, $380. This one expires next week. We got $270. We're up $200. I was thinking about closing this, and I might, but I also think Netflix, again, it's like $100 in a week. We'll see. Again, I might even close it out if it makes me panic tomorrow, but there's that play. Then we did the Nike. Still says we're down on it by $27 because this one has an awful risk to reward, but Nike's still above 100, so we'll see. Again, same time frame. We'll find out next week. And then that McDonald's, remember, we've been down on that most of the week. Here it is right here. But I think we're down, I think it's still like 150 if we closed out, 190 loss. So the Netflix one would balance it out, and then we'll have the Nike one, and then we just open that other one. And then those covered calls, remember we sold the Abivai 100s. I'm down on those. The real ones, I'm down on those as well too. But those are covered calls, so a little bit different than selling the put strategy. But that was pretty much it, I think, as far as the plays. And then as far as tomorrow, given what we saw, I'm going to look at these for tomorrow and next week. Wells Fargo, Bank of America. I really like them. Again, usually after the Fed, we've seen the banks move, and they did indeed move, but I just don't like the premium and volatility in these contracts. So that's why I'm like, tomorrow or next week, we will see. And then finally, Tesla, I'm still holding that play. Remember, we did this way a few months ago, or I think a month ago, and I said I went both ways June 19th. These have till next week. We're down on the put. Remember, we did both ways on it, $2,200. So I have a total profit because I've made up the loss from here, but I'm gambling. I'm going to ride it out on Tesla. I think they're at the $200,000 mark, I think it might go crazy, or at least I'm willing to take that Tesla gamble. I never get to do it, so come on. I'm hoping I wake up to like 200 million or something. I think that's what happens. So let's see, or I'm going to lose everything. So I'm excited, but that's pretty much it as far as those plays. As far as everything else, very, very simple tomorrow. I'll be monitoring a lot of the plays. Again, I am going to be focusing on Wells Fargo, Bank of America. They're moving big. Again, the JP Morgan call is still held up 100%. So there's opportunity, but there's also volatility. But I'm going to be watching the Beyonds. Those went up again and then came down. They got killed a little bit. So did the spots. We're going to be watching that play. Then Eli Lilly and Johnson & Johnson. Watch them. Johnson & Johnson got vaccine news. I wanted to get calls on these, and I'm interested in them with time. So I'm going to see. But again, they've been one of those winners. So think about how Walmart's traded and looking at that. And then Eli Lilly, they're a slow mover. They got vaccine news, but again, they're a really, really slow mover, really, really solid dividend company. So this stock isn't supposed to pop off. So we saw that news. We'll see how it affects it with the vaccine, but who knows? But then HD and McDonald's, again, I'm still holding that McDonald's. I'm going to watch the HDs and see what we could set up, but I want to see if we see any sort of rotation and how that gets affected and how that plays out tomorrow. And then finally, no UUP, just watch our long-terms, Abby vibe, but then GLD went up too much. I didn't like the plays when I was looking at them a little earlier. I should have jumped on them, but we will see how it plays out. Going to be watching that, but TLT did good, and again, it did do what I expected to just go up, and I think we do have our floor here. We will see. But the Fed didn't really give me the news to confirm that. So I was wrong on that, but I was right because the bond buying him saying they're going to be able to transition is kind of a good way of saying we're going to support, and set that floor there, but who knows? So I want to see, and we'll see how that plays out. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need your head in the game. Need you focused on your lane, baby. You don't got time. You made it this far. This next 6 months, you got time to focus. Get rid of the noise. Get rid of the distractions. And if they doing good, then you good. They doing bad, that's unfortunate. But you on your lane, baby. Don't crash. Show some love, receive some love, be patient, and don't force it, baby. The Colt loves you, I love you. I'm going to see you in the morning. Let's go.